Hi, it's Craig Matthews here from Insurance House Life. This is the second of our Trusted Advisor series. It's about key man insurance, which is both the most relevant to small and medium business and also the most underutilised. So I'd like to talk about an example of a situation that happens all the time. Like all businesses, at some point, Angela and Paul want to take their business to the next level, and as usual, their first point of contact is the bank. They needed to purchase a bigger factory, a multi-tool CNC machine that could triple their output, and borrow a little extra to finance the fit-out and additional staff and equipment. This went well, and Angela spent 3 months in the States learning how to program the system, and Paul got started on selling their new capability. The machine cost was expensive, but in 3 months' time, it was already paying for itself with new contracts, and business had never looked better. They asked their general insurance broker for advice and implement a robust insurance program covering machinery breakdown, business interruption, and all the usual policies. They'd made a big investment in training Angela up to run the system, and without knowing it, not only had they created a dependency on an expensive piece of equipment, but they'd also created a real key man dependency. What they didn't consider was Angela. And as Murphy's Law would have it, something happened to Angela. She had a car accident while she was on holidays in Bali, and this started a chain of events that Paul could never have imagined. Paul found that he couldn't find a replacement willing to leave their current situation and set up in the small country town where the business was located. This meant he couldn't fulfill his contracts and he had to suffer liquidated damages, and that took out almost all of his capital. The other contract that he had was cancelled and his competitors took all the work. There was basically nothing he could do, and worse than that, the bank was now coming for him as well. Now the bank was convinced that he couldn't recover, and they called in his personal guarantees. In the end, the bank took the business and the assets, they took his home, and he still owes them $400,000. And worse than that, he now needs to find a house to rent for his family while he's unemployed. But it should never have happened this way. If he had been advised to implement insurance cover to cover the loss of a key person, the company would have been okay. He may have lost the contracts in the short term, but the company could have repaid the debt owed to the bank, ensuring that the personal guarantees were released from his and Angela's homes, and that the company had sufficient revenue to cover the business for a year, and also fund a replacement for Angela. Simple as that. This is something that happens far too often, so ask your clients one of these questions. Who can't you afford to lose? And follow that up with, what would happen in that circumstance? If you think this might apply to your clients and you'd like to know more, please give anyone in Insurance House Life a call. I'm Craig Matthews. Thanks again.